to another video session with Bullionite. Thank you for joining us today for a market analysis segment or video analysis that I'm going to do. This is actually in keeping with my promise from my previous video where we went over quite a bit of fundamental events that have unfolded over the last 2 months. We went over like a general global view of the fundamental events like the Federal Reserve reducing interest rates, the currency devaluation from China, the trade war with Trump and China. So in that video, I did mention that what we're going to do from Bullionite is we will look at the actual markets that got significantly affected or responded. You know, we can use both words, affected by a fundamental event or responded to a fundamental event. We're going to look at the specific markets that had major market movements and price action, right? And in the last video, I mentioned that we'll be dissecting the gold market, the crude oil market, and the equity markets, which is great stuff if you think about it, because this is very valuable information because these three markets, the gold market, the crude oil market, and the equity markets were heavily affected by the fundamental events that have unfolded in the last couple of months. So today I'm going to go over the gold market and we'll do a deep analysis of the gold market. We'll look at the daily charts, the weekly charts, the monthly charts. We'll also look at the price action and what is happening now, what happened or how they responded to the events, and what could happen going forward. Okay, so right now I'm going to show you the charts in the gold market. So we are now looking at the gold spot market, and this is a continuous spot where it shows the price movement on a continuous basis. What's also interesting is we can also look at the most, what we call the most common traded futures contract, which is the December gold contract as well. But right now, both the December gold contract and the spot are trading in a way where it is the most important contract that everyone's trading. Okay, so meaning the high volume contract. So it's important. So it's better to look at the spot price as well. Okay. First, what I'll do is on this chart, I want to point out a few things. First, we're looking at a daily chart. So I'm going to kind of write out a few things so you can see what I mean by that. And let me change the color right here. Okay, so this is the daily chart and we're looking at gold right there. And also, just so that, if you haven't been following my videos, you'll know that I always like to look at candlestick charts because I feel like they give you a very strong representation of the price movement and what could happen going forward. And later, we'll even do a couple of videos on why candlestick charts are important. And when we release that, we'll let you know. But for now, what we're looking at is the daily chart on the gold market. And let's start off from the beginning of the year. So right here, 2019. You kind of see that the gold market, after having a good run during December, usually gold tends to run up during the latter part of the year, November, December, usually around December. And then you can see this run up right here. But then it had some resistance in this 1350, 1375 area. Okay, that was the big area that gold had some trouble. I'll actually show you this on a weekly chart where you can see it better, but it usually came up to that, then got kicked back down, came up, got kicked back down, and then kind of traded sideways around that channel. And you can see this better on a weekly chart. So I will refer to that when I change the chart. But then what happened is, as the fundamental events started coming in, one by one, right? With the trade war situation and the volatility in the stock market kicked up, gold in the mid to late May and then going into early June, right here, you saw that gold was able to go through this resistance level and then had a huge move since then. Okay, big move on the daily chart. It's actually gone from 1350, which is right here, to around 1535, 1540. So that's almost a $200 move. This is a $200 move right here in gold, just in response to the major fundamental events that are unfolding in just the last maybe 2.5 to 3 months. That's a big deal, guys, okay? And what's even more important to notice about this movement is that it's broken through another major resistance channel that was in place for the last year and a half or so, and you'll see this when I go on to the weekly chart. And that's very important, because if it starts consolidating here and then you start looking at a monthly chart, you'll see that gold is on a very strong uptrend and there's a lot of opportunities. So that's why it's important for you to learn first you have to understand, what does this move mean? And then how do you take advantage of this move, right? And then what to look for, because gold's not just going to continuously move up and up and up. It's going to do some, corrective moves back. So you need to understand what that means. Where can it come back and how can you get back into the trade? We'll go through all this, okay? So for now, just understand, because of these fundamental events, gold, which was trading around the 1300, maybe 1250, 1300 level, has gone close to 1550. Okay, now what I'm going to do is I'm going to clear the screen. I'm going to go on to the weekly chart just to show you kind of a more longer time frame idea of what's going on. And now what you'll see here is exactly what I talked about that resistance zone at that 1350 to 1375 region. Okay, so this is a weekly chart, gold, and here you can see, even going back into 2016, mid 2016, mid 2017, mid 2018, how this area to 1350 to 1360 has been a very, very strong resistance zone. See how the price came up there, got kicked back down, comes back up, got kicked back down, comes back up, got kicked back down. And then right into 2019, it tested it again, came back down, and then blasted through that. And since then, it's had that big, massive run. This is a classic example of a market that has broken through a resistance level because of external factors, and showing you like a significant strength. And that's because if you've been trading gold for a significant period of time, or if you've been observing the gold market, you'll know that gold is a market that is attracted by safe haven, concerns. It's attracted when volatility increases, and especially because the stock market is getting so top heavy and getting so volatile, it makes sense that people are moving money out of more speculative instruments into something that they consider is a safe haven, market. And also, not only is it acting as a safe haven market, it's also giving some very strong, profitable opportunities, okay? So this is a very important thing to see how strong. This is a beautiful chart to show how you kind of had a triple top in resistance right here, and then how it broke through right at this point, and gold has gone up significantly. Okay, now what does this mean? What I want to show you is I'm going to just clear this and take you to the monthly chart in gold. And why is that monthly? Monthly means that we'll be looking at a longer term chart, even a longer term chart than a weekly chart, and it'll show you years worth of data, okay? And like I've always said to you in my videos and in the way I trade and the way I educate, is that it's very important for you, when you are looking for a strong trade, to analyze that market on a daily, weekly, and monthly charts. A daily will show you what happens every day. Weekly shows you what's happened inside of those weeks, so it'll show you weeks, inside of a month, and then a monthly chart will show you months inside of a year, so that's longer term. And what's very interesting on this monthly chart in gold is that you'll see how, after again this resistance level that I was showing you in that 1375, 1350 area got taken out, it's gone on another strong uptrend. Okay, now this can go on maybe to this 1600 area. You see how if you go back to 2011, 2013, I was part of the market when it ran up significantly from around $680 an ounce to about 1,921, and then how it consolidated and then had that big down wave. So we were part of this market, okay, part of this massive bull run. So analyzing this market now is very exciting, because we can see that the resistance zone is around 1600, okay? So this market could come to 1600 and then maybe pull back, and then it can consolidate and then get ready to break through that zone. It's not going to be easy to break through that unless you have some major things coming up, but it'll take its time, and that's what we call an energy base. It'll form a strong energy base right around here. Just like it formed a strong energy base right here and then got kicked up, it can form a strong energy base after going through here and consolidating and maybe kick up, okay? So we'll watch that. So that's a very important thing to keep in mind when you're analyzing this. But on the monthly chart, you can kind of get an idea of where is this going now. After breaking through this resistance zone, it looks like it's going to come into this kind of resistance zone that was established previously. And we're almost there. So you're looking at about that 1600 level, okay? And then we'll see what the market wants to do at that time. The other thing that I want to quickly point out is if you've been in this market for a while now, for the last 2 months, and you've had this massive move, just understand that it's going to do some corrective moves. Why? Because if you go on to the weekly chart here, you'll see that the RSI, which is the relative strength index, has gotten very overbought. And it's time, because it's gotten kind of long, it's gone quite a bit, for a few weeks at a time. Oh, week 2, 3, 4, 5, 6, 7, 8, 9, 10, like that. It's kept going higher and higher. And it could pull back and let this RSI, and I'm going to just point it out to you right there. It could pull, this is what we call the RSI, and it shows you when a market is overbought or oversold. I have done a video about the RSI, and I'll do more videos as well. So when you get a chance, look at that as well. We'll just dissect just an RSI, how an RSI works and how you can use that in the markets. But what we can see is that this could go here and then kind of turn back around, come down, and then maybe get ready for the next run. So just keep an eye out. If you've had a very strong, profitable trade, make sure that you're ready to take some profit. Have good stop management techniques. Refer to my video about how to place effective stops. And then until next time, happy and successful trading. And if you have any questions, please reach out to us.
Content is for educational purposes only. This is not investment advice from Bullionite LLC. There is always risk for substantial losses in investing and/or trading through any financial instrument with or without this or any other type of advertised product. Past performances are not indicative of future results. Different types of investments involve varying degrees of risk. Specific strategies or education presented by Bullionite LLC and its associates in this video are for educational purposes only.